We're about 8 minutes past 4, and the Straits Times Index is showing signs of still being labored and beleaguered, and is down by about 4 points and is in danger of missing out on a rally that lifted stocks across the region modestly. But while markets from Shanghai to Sydney gained today, there is still the specter of the brewing U.S.-China trade war and escalating tensions arising from the blacklisting of Huawei from U.S. markets and technology that is weighing or casting a cloud over market sentiment. And whether or not this trade war is turning into a tech war between the world's two largest economies, it has posed challenges to markets here, and especially in Greater China, over the most of the second quarter. So what is in the future for Chinese markets moving forward, and how might we treat the Chinese markets in the coming weeks as we await some resolution or hope for some resolution to these trade tensions? We're joined now on the line from Hong Kong by Peter Chun. He's the founder of Silverbear Capital, to give us a better idea of where Chinese markets, how investors, that is, on the mainland and in Hong Kong, are reading some of these latest developments. Peter, good afternoon.
Good afternoon.
Yeah, Peter, so again, as we mentioned, this trade war is turning into a tech cold war, as some people are saying at the moment. But overall, we've seen it impact Chinese markets. Now, despite the fact that the markets in Shanghai and also over there in Hong Kong gained today, we have seen year-to-date gains for Shanghai almost cut into half because of this. What is the prognosis moving forward for investors in China, which seem to be becoming more and more nervous as the days go by?
Well, from Shanghai point of view, I mean, there's a lot of interdepending companies between U.S. and China, because there's a lot of Chinese companies that's actually living on U.S. technology or originated from U.S. technology, and these obviously are companies that are being pressurized right now by a lot of the sign coming in from the tech war here.
Okay, and the idea now, Peter, also is that China, or the hope now is that China or Beijing is going to ramp up economic stimulus once again. But can this still work? It seems that this is this seems to be the only play that China has now to throw at some of these trade tensions and the slowing economy that we're seeing in China. How much more stimulus can China really throw at this, and how effective can this be to actually lift or sustainably lift market sentiment over in the mainland and in Hong Kong?
Well, I mean, the true question that the Chinese people is always asking themselves is, can they be depending on themselves on building their own tech? So obviously there is intense assistance from the Chinese government right now, assisting local companies to grow their own technology. And hopefully these are kind of the stimulus that the local are reading, and hopefully somehow down the road this will relieve the market sentiment on looking downward for these tech companies in China, or maybe tech-related companies in China.
We're still speaking to Peter Chun, the founder and managing director at Silverbear Capital in Hong Kong. Peter, I also want to talk about the blowback from Huawei's recent blacklisting from U.S. markets and access to U.S. technology. We see what happens whenever Apple takes on certain hits. We see it start to impact a lot of suppliers in their supply chain, and Huawei also has a rather extensive supply chain. How far-reaching can the impact of all these problems or challenges to Huawei have on markets outside of China and also in China, especially along that supply chain of Huawei?
Well, I mean, Huawei is obviously being famous building the Super 5G network worldwide, and obviously now it's banned because of various reasons from U.S. Disallowing Huawei to grow into a global company in some way. Now, however, I mean, if you do notice that Huawei did sign up a few other territories like German, etc. But however, the supply chain are also being questioned by cutting all the U.S. Stuff from what maybe Huawei might be using. Now, Huawei is claiming that even without the U.S. technology assistance, it can still move forward. And again, the market is still questioning about this. So we on this end are trying to figure out if Huawei are able to come up with suitable technology to replace what they've been using, or maybe they have been collaborating with the U.S. in some sort of ways in the past.
Right. Peter, many investors here, or investor sentiment in Singapore has actually started to get a little bit more muted. Value turnovers here have been also rather thin because of some of these worries and uncertainties. People also choosing to stay in the sidelines or park their money in cash. What's the move, though, over at Silverbear Capital? Is it also risk-off sentiment over at your fund, or are there pockets of opportunities that you're seeing across emerging markets or other markets in general as we wait out some of these uncertainties?
Well, I mean, definitely, we are working with other asset managers to benchmark what's happening, and obviously, we are all a little bit more conservative about companies like Huawei, Alibaba, or companies like Tencent, which again is in the region working with the U.S. guys. But again, all these large companies that we have a stake in the pie right now, we have interest in the past and again for the future as well for our portfolio because of what they are and who they are and how they've done things. But however, for the temporary period, hopefully this is a fight ending a fight. So I'm not saying that we should sell out right now, but then obviously this is how we should relook at our portfolio, and then I think we should just basically sell a little bit of our position first, and then but not all of it, just to react to the current scenario.
And finally, Peter, before we let you go, I know it's been a busy day for you guys over there. Let's take a look at the Chinese yuan. The renminbi has weakened significantly since the escalation of these trade tensions, and many are worried that the yuan might even hit the critical 7 to the U.S. dollar level. From your trading desks over at Silverbear Capital, is this a possibility?
Yes, it's a possibility because from what we are seeing is President Trump is seeking to actually penalize countries that allow their currency to fall against the U.S. dollars to offset the impact of the new U.S. trade sanctions. And of course, since we were reading figures like, I think the yuan has fallen about 8% against the U.S. dollars since the trade war started in July last year. But the good thing is, China does not meet the current criteria to be labeled as a currency manipulator. So we do a lot of RMB business on our end, and we think that China should not weaken the currency to fight this because I think it's not a good thing. You will kind of kick back back to them somewhere down the road. So we're thinking that China will not deliberately devalue the currencies to fight this trade war.
All right,
That's
Peter.
kind of our reading.
Okay, Peter Chun, Managing Director at Silverbear Capital in Hong Kong. Thank you so much for joining us this afternoon on Primetime to give us a closer look at how Chinese markets are developing amidst the trade war.